Yo, what's going on, y'all? It's your guy, the 10X Closer, and this is the Garage Billionaire YouTube channel. And it is now 10/23, March 18th, and it's FOMC day. And I don't know if I'm taking a trade today, but I just decided to just kind of record what I'm looking for, what I'm doing. Kind of feel off today, personally. Um, and also, it's FOMC. So, they say be careful on these days or try to avoid trading them altogether. So, it's probably what I'm going to do. Unless I see a nice setup, because I don't want to take any L's if I don't have to. Alright. So it looks like we're basically on a downtrend, and we're still respecting this bearish imbalance from yesterday. This bearish 1 hour imbalance from yesterday is respecting it on a higher time frame really nicely, especially on as low as the 15th. Look at that. I thought we were going to inverse yesterday. I was looking for a trade, but it didn't. I always wait for that close above, and if you would have caught that close on the 5 minute, you would have got eaten up by the market. So I would tell you guys the 5 minute is cool, but in certain instances, when you're trying to get confluences from a higher time frame setup, like for instance in this case, the 1 hour. I always go to a higher time frame, like let's say the 15 minutes, to confirm it. The 5 minute isn't going to help you. Like let's say in this case, as I was looking at yesterday, and I still can't get my cursor to work on this stupid app. So let me get a happy face cursor for you guys. Let me use that. Let me use this as a cursor. So as you can see, if I use the 5 minute, to take advantage of, let's say, for instance, in this case, an inversion on the hour gap, I would have been cooked because, as you can see, it did invert it with a beautiful bullish candle. Now, somebody would go ahead and take that trade on the break of that inversion or the close of that candle and take that break above, and it would push a little, or it probably dropped first and then pushed up, and you would be thinking, damn, we go into the top to probably take out this hourly swing high that I had, because that was really the goal. That was really going to be one of my targets. But then I realized that, let me check it on a higher time frame, which was the 15 minute. And if you notice on the 15 minute, we actually didn't get an inversion. It was just a wick. above that hour FVG, and it actually closed back inside of it. The next candle wicked out again, closed inside of it. And my mistake, which I was kind of aware, but for some reason I was a little bit spooked. Um, I need to be more confident in my analysis. And I was gonna take that next candle, and I was literally gonna ride that baby all the way down here, but I didn't. And the reason I didn't is one, I was spooking. I was thinking too much because we were over the equilibrium of this gap. So I'm thinking, if anything, it's just not ready to break out yet. It's going to pull back and then push up, because what would make sense is if it, sweeps this hourly uh, hourly liquidity zone and then close back and then come back in to push all the way down. That's what I thought, or that's what I was looking for, but it didn't happen. And once you delay in a trade, that could cost you. And I'm not chasing trades, so in that instance, I kind of missed it. There was other opportunities to get in, like on this uh, on this other imbalance that formed. We bounced back in, pull back up into that imbalance, and push even deeper. And as you can see, we kept coming down. So that was my mistake. I didn't chase the trade. I just let it be. But that was that. So I say all that to say, make sure you confirm your 5 minute entries on the 15, if that makes sense. And that's if you, let's say, for instance, this was a 5 minute FVG, bearish FVG. Then I wouldn't be looking into the 15 minute to confirm it unless, there were other gaps in the 5 minutes above this, that would potentially have me, potentially push price up to those gaps to then come back down. So, on the 5 minute, you could kind of go with what's going on. But long story short, I wouldn't use the 5 minute to get into a trade that essentially was marked out on a higher time frame. People like to drop down to the low time frame for higher time frame confirmations, which is cool. It works in certain cases. But again, it didn't happen in this case. In this case, using the 5 minute off this hour gap would have most likely, unless you got out quick, would have cost you that trade. So anyhow, looks like we're pushing even lower. I want to get in a trade. I haven't taken a trade for a minute now. I haven't taken a trade all week, actually, and it's Wednesday. And it doesn't feel good when you miss beautiful entries. Look at that. This was a nice trade right here that I missed. We could possibly pull back up in here before we push down again. That would probably be my next entry. But what I don't like is this is a hourly swing low. Could you see it? I gotta get this monitor. I gotta get this set up back together, man. So yeah, we could possibly push back up in here and then continue to come down because I mean overall we're bullish. I mean bearish. Um, or this swing, this could be a liquidity sweep off this hour to push it all the way back up. Where's my happy face marker or cursor? Talking about this swing right here. This hourly swing low from previous day. We could swing this, close above, and continue to push up because we haven't taken out Asian highs yet after the New York Open. So New York hasn't taken out Asian highs yet or London highs. So it's quite possible that we could reverse from here. But we have this gap here on a bearish trend, so we want to continue to focus, on a bearish trend, unless we inverse this gap. Then we'd have to do this one, which probably would. But this would be a nice trade from here to here. But we also have another swing low here. Okay, we close below. So that candle was weak. That wasn't real bullish. So we might be able to come back up in here and drop back down to this area. Which is another hourly swing low, which means there's liquidity here. So it would make sense to come down here, take the liquidity before we actually go back all the way up, take that, and if we're going to continue down, come back down, or if we're going to continue to go up, continue to go up. But with my entry, especially being that this little gap didn't form and was closed in a sense off of this red candle, the drop right here, I would be looking for an entry inside of here. And let's see what that would cost. Okay, 79 points. So this would be a possible 1 to 4. Let's see if that plays out. Let's see if it plays out, folks. Or we could continue pushing down. On days like, your FOMC, CPI, you want to be careful. You want to be careful because the market can get freaky and do some weird shit, but just wants to be patient, man. But go ahead and please like and comment on this video. Subscribe to the channel, right? Subscribe to the channel. Hey, what's up, Pop? What's up, my boy? Come here. Come here. Come here, Papa. All right, see, we're getting that push back up. This is the future of trading right here. If we get a rejection from that fair value gap, your boy is going to take it. What's up, Papa? Okay, come on. I'm back. Looks like we didn't get that push up. Then we got this 9 EMA that just dipped down. Whew. That means we might not be utilizing that gap. Yet. But let's see. You got to make some money, baby. Oh, yeah. And just to let you guys know, this is not financial advice. This is only for entertainment purposes. So don't follow my trades. Watch what I do and go figure it out on your own. Do what works for you. We're just here learning how the market works. I am not a super trader. I am not the best trader. I'm just trying to get it just like you trying to get it. But I'm going to get it for sure. call out these trades all day, every day. This baby is pushing. I hate when that happens. Could you imagine getting in right here? This was a beautiful entry. Beautiful, beautiful. That would have been 100 shoots. That would have been 330 points from there, from that entry with 100-point risk. So that would have been a 1 to 3. Mm-hmm. Little over 1 to 3. But let's see if we could catch a couple of dollars today. If you're watching this video, in the comment section, put the number of years you've been trading. I'd like to know. Let's see what's going on. The fact that we can't get above this hour low with a nice close tells me that we want to come down. We got a 15-minute close below it. Actually, we got the 15-minute imbalance up here from this big ass gap. So we can still possibly go right back up in there. Go right back up in there and see on the 5-minute, that gap is smaller. On a 15-minute, we'd actually have to be up here, which would have technically, well, not even technically, but my stops on the 5-minute would have been above here. So this would have still been a good entry on the 5-minute, even with this big 15-minute gap, which would be better. So I think the safer entry would probably be on the 15-minute. And I could bring my risk a little bit more up here, but it's more of a risk on the 15-minute. Well, more risk on the 15 minute. Comfortable risk would be about 146 points. Unless I wanted to take a higher entry. Well, let's see what happens, man. Let's see what happens. Do I want to risk that much? No. But sometimes it's necessary for the trade to work, or don't take the trade. If the risk is too much, don't take the trade. Sometimes we want to take a trade, but we don't want to put on the risk, in the proper area. And then what happens is the trade plays out the right way, meaning let's say it would go up in here and you put your stop down here, where on a 15 minute comfortably it would have to be one of the safest zones would be right here, which would be above equilibrium of this green supply candle. So many ways to trade. That would be the safe trade. This would be the risky trade, putting your stops here on the 5 minute, based on the 5 minute. On a 15 minute, it would cost you more unless you took a higher entry. But there's just so many ways to cut this, or I would say skin this cat. You have a lot of traders, and I hate to see it. Everybody's always discrediting somebody else. They want to discredit other people, other traders, saying that, oh, they just make money on affiliate marketing, or affiliates, I should say. They don't really know how to trade. And I'm like, yo, some of these motherfuckers been doing this for years. So you telling me even if you're in the space and you're making all this affiliate money and you didn't know how to trade at the beginning, but you knew how to market. So you telling me all this time that you know, uh, drawing out these charts and you know, taking these setups, and whether it's recorded or whatever, pre-recorded, and somebody did it for you. You telling me after all these years you wouldn't figure out how to trade? That doesn't make sense to me. And it's always someone, oh, they don't really trade, or they don't even know how to trade. I'm like, that's bullshit. Trading is simple. Trading is not the hard part. It's usually the psychology behind trading that's the hardest part. You can know exactly what to do. The best trader in the world could show you his strategy, but if your mental is not there, your psychology is not there, it's not going to matter. It's not going to matter. You're not going to be a successful trader if you're not corrected first. So, yeah, with all this, and I used to hear about it and couldn't figure out like what's the beef or how that actually work, because the beef that I'm familiar with isn't in trading and shit like that, you know. Um, and yeah, it's like they're going at each other, and oh, ICT is this, and trend lines aren't real, aren't isn't a real strategy, and just a whole bunch of mess. And I'm like, yo, everything works. Everything freaking works. Everything works. And yet you're discrediting somebody else, and you're on here trying to get people to go what you're doing. Don't make much sense to me. Like, what makes you better? It's a dog eat dog world out here. Everybody's just stepping on the next person's foot. Well, are we going to push back up? Looks like we are. But in this case, the only way, because if we do push up, we're going to be pushing up from an hourly swing low, which is, we would be in the liquidity area right now, where it's picking up liquidity, taking out all those stop losses, previous stop losses. And if we push up and we push up further, then I would not front run this particular trade because I don't like the way it's moving now. I wouldn't front run it. I would wait until we get a nice push into this gap and a nice rejection from it, and then I'll take the entry. But we're doing a lot of foolishness right around here. Very undecided. Now watch, it'll probably just either shoot up or dump below. But either way, I'm not chasing it. It would have to come into my trade zone for me to take that trade. Oh, I wish I would have taken that previous gap. But I ain't gonna lie, the 5 minute, man, that's a very strong time frame. Works like magic. To be honest, you don't even need anything more than that. You could use it. The higher is just, you know, more, I would say more solid, if that makes sense. But especially trading, YM US 30, you get enough points. You get 100 points in one candle, easy. I mean, what more do you need? In these markets with all this volatility, everybody is getting fat or either losing because the average candle could push, like 50 points on a minimum. Look at this. That's a 79-point candle. This one right here. This small one right here, what appears to be small, is 62 points. Let's see this little baby candle right here is 31 points. That's a lot. With the right contract size, lot size, you could be making some money. And I'm going to be putting my links in the description for the brokers and prop firms that I use. So, well, Top Step doesn't have an affiliate link, but I'm also on Lucid Trading or Lucid Trader. I like them. So, this is a combine that I'm going to get started. I haven't messed with it yet. And this is my Live Express accounts with Top Step. My Forex broker for all you Forex traders is CoinX. I'm going to put that in there. And all the other brokers that I use. I don't vouch for anybody, but if I use them, then, they were cool with me or cool to me, meaning I didn't have a problem with payouts or withdrawals. But all of that will be in the link of all my trading videos. And if you want to watch my podcast stuff, it's on this channel too. If you want to make this a whole financial entertainment channel, because that's my thing. I'm an entrepreneur, a businessman. Okay, see, now we're pushing up. Let's see what it wants to do. Let's see if we get a rejection up there. Okay, so we just broke above that hour swing. This candle could either reject and come back down, which is what I'm looking for, or it could inverse that gap. Oh wait, this is the 15-minute gap. Let's go back to the 5-minute gap. It could inverse this gap and continue to the top. Okay, we're getting some rejection. See, this is what I like to see. Nice rejection inside of that gap. I want that candle to be weak as hell. I want the next candle to give us last push into equilibrium of this gap. I want that next candle to be red and shoot down. That's what I'm looking for. We're sticking with the trend. Whew, that's a nice rejection, but it didn't get to where I need it to be. That right there is an 80-point rejection. Well, actually not 80 points. 80 points from here. So that was about 70 or 60 or something like that. But there's 2 minutes left on the candle. I want to see another weak green candle. And I want to see the next candle push up and reject hard. Preferably, I would like to see a full green candle on this one going into the imbalance, which is the gap. And the next candle I want to see bearish. And I'll take that baby going down. Nice rejection out of that zone. But I want to take that entry right there. One thing I know for sure is that we want to get, okay, we got a green candle. We want to hit at least equilibrium before taking that trade. Like, see, a rookie would have took that trade off that rejection and have to possibly sit out through the drawdown on this next candle that I'm sure wants to get at least to right here before it start coming back down. And that's what I want to see. So that's why you don't want to front run these trades. See, that last candle rejection would make you think, oh, we're going down now. But no. All right, we want to see a nice rejection off this 20. I'm going to take it here. Said I was going to wait for the red candle, but fuck it. We in the trade, baby. All right, I need to see a strong rejection. And the reason I took that was we've been riding the 9, and usually when it breaks the 9, it'll bounce back down off the 20, which it is at the 20 right now. So hopefully we get a rejection off the 20, a nice strong rejection back out of that gap. And continue lower. All right, that's what I want to see. This is what I want to see. I want to see a nice close below and a continuation down. Okay, we got a nice close. I want to see a strong bearish candle. It's going to push us down. It's looking good. I want to see a nice red candle close. And to be honest, we shouldn't be pushing back up. If we do get any sort of bullish flip, I'm closing it, which I usually say, let it hit the stop, but no. I've figured out these markets, and, sometimes I close early due to fear. Sometimes it'll be skill, because if it flips from here, wouldn't make much sense. If we flip outside of, I got a good stop loss. It's just, I don't know. Let's see. Let's let it play out. Fuck it. If we get a strong flip, I'm not gonna like that. If we get a flip above the 20, it's not gonna be good for my trade. And I'm not trying to give the market any money. It's FOMC day. It's not really. I shouldn't even be trading right now. So they say. But let's see. Like I said, I need a red candle close. If it doesn't close red, we out of here, baby. And I would definitely need a close outside of outside of the gap. But I'm practicing risk management. I'm not trying to give the market back no money. Not if I can help it. Or a little bit of it. Let's go, baby. We got to come down. We need to come down to the depths of hell. I would love to see a drop down to 46,657. Let's go, baby. Let's go. This is how we trade, baby. Okay, nice close. I'm going to add in more risk. And bring us down. Wait, what just happened? Look like this didn't go up much. Again, I don't want to see a flip back to the upside. You want to hold that 20. If we can't hold that 20, I don't want nothing to do with this trade because we need to push down. What hour is that? The hour swing high. Let's double check something. No. go, baby. We need that drop. That drop, 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 drop. We got to break through this right here. Let's go, let's go, let's go. I don't like that there, so let's make this a risk-free trade. Fuck it. I don't want to see a bounce. I want you to break through that. Because if we get a bounce, I'm closing. I need a strong push through. Strong push through. We up 56 points. Break, 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 break through that. Break through it. Okay. Let's break through. Let's break through. Let's break through. We don't want to come back up. We need to inverse that gap. Or I'm going to just take my low points. Because remember, y'all, I shouldn't be trading today. So they say. 69 points. 69 points. Let's break it. Give me some more money. Give me some more money. Now I'm comfortable in the trade. I took 20 pizoints. Okay, we're breaking below. Okay, okay, okay. Okay. Locking in profits. Let's go, let's go, let's go. We want to see a dump. Like a dump truck. We want to see some dump truck action. All right, I locked in what I need, what I want for the day. Let's go, baby. Let's go, baby. Let's go, baby. Don't take me out, baby. Don't take me out. I don't want to go out. Just go. I don't want to go home. Let's go. 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 I know what I'm talking about. I know what I'm talking about. Come on now. Too early to be pushing back up, man. Let's go. Let's go. Come on now. Come on now. Don't take me out. I don't need a bounce here. I need a close below. Come on now. Why would you do that? Ah, Jesus. Come on. Push down. Push down. Don't take me out. I'm not ready to go home yet. I'm not ready to go home yet. Come down. I'm not ready to go home. Where's the magnet? I need a magnet. Where's the magnet? Where's the magnet? Only the magnet can help me now. No. No. Damn it. No. Am I going to get the magnet in time? No, 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 no. There it goes. Come on. Come on, big magnet. Let's go, let's go, let's go. Come on, come on. Yes, 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 yes. Big magnet, big magnet. Come on. I need the magnet. The magnet, 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 magnetize. Let's go, let's go, let's go. 56 seconds. We need to close red. Don't flip on me. Do not flip on me. The magnet. Damn it. Got me. Damn. I got the magnet too late. I got me 50 points. That's cool. Let's see what it want to do. See, I don't like this close. We came into this gap right here. I was hoping for the inverse. It didn't give me the inverse. And just like I knew, this gap, so it could take me back all the way up. Let's see what it does. Because remember, oh, and it closed right back above that hour swing. So shoots. Should take some buys right here. I'm not going to gamble. Let's see what it does. Let's see how it plays out. We already been in this trade for an hour. Well, I've been on for an hour. I took 52 points for the day. That's good with me. I believe we're flipping back over. It's respecting that gap nicely. Let's see what it wants to do. Hold on, y'all. I'll be right back. Oh man, look like we're gonna inverse. Looks like we coming down. Maybe I got out. Not maybe. I absolutely did get out too soon. I definitely did shoot myself in the foot. Yep. Looks like I messed up a good trade. Well, I ain't gonna say that. I got my money. And it's still not confirmed down yet. We still haven't inversed this fair value gap. Or did we? Actually, we might have a little bit. I should have held that trade. I should have held it. But in this market, man, to be honest, is see money, take money. At 52 points on multiple accounts, I'm not mad. I might come back in this sale. My magnet was working. I just didn't like this big rejection or this big wick on that green candle. That's telling me we could have pushed up, but now we're inversing this bullish fair value gap. Makes me want to finish the trade off. But technically, we got this order block. I think we're going up. I'm happy with my exit. I think this is a trap because we should have inversed and kept pushing down. The inversions are tricky too, especially dealing with the order blocks. On YM, US 30, those order blocks are strong. And look what it did. It came right into it. Center line of the order block, just to push back up. Yeah, so I'm glad I took my profits there. We're going back up, baby. Watch. Watch what I say. we going up, baby. See, I'm good with getting out there. I would have been stuck in this foolishness. But again, I saw that the reason we could be going up is, again, like I said, the sweep. Now we're closed above it again. We have this hourly swing low. We have a bullish imbalance. Usually if I would be taking this swing and it wasn't bearish for the day, I'd be sitting around waiting for this to happen here to take a long. But since we've been bearish so long, I wasn't looking for any sales. I mean, I was looking for sales. But again, I feel like from here, it's going to respect this swing. Came here, take liquidity, went into the gap, also into this order block, perfectly into the equilibrium of that order block, which is where I love to take entries. Those are the ones that really work. So we could possibly come all the way back up here. And if we're going to continue down, we're going to continue down from where my stop loss was supposed to be, from that area. But I'm good. I'm happy I got out. Should have took that 100 points though. Shoulda, woulda, coulda. But anyway, I'm going to go ahead and wrap up this trade in a second. Stop that, Papa. I'm going to wrap up this trade. Let's give it a minute to see if it's actually going to push up, which I think it is. But in the meantime, please like, subscribe, and comment. Let me know what you think. All right, it's been an hour, 15 minutes. Again, this is for entertainment purposes. This is not financial advice. And I should be done for the day. I ain't gonna lie, I should have took these buys. Buys made sense. It's a good counter trade, you know, going against the grain. But like I said, I have my reasons why I would have taken this, considering this bearish trend. This could be the bottom. This could be the reversal. Anyhow, it's going up. What are we going to say? It's 11:30. Market is slowing down. I don't like this slow push. See, I'm glad that I wasn't sitting in any consolidation. And as soon as I got in the trade, it literally did what it had to do. And we ran down. Anything else it does, that's on whoever else is trading. But hope you guys had a good trading day today, and I'm out.